Matt Taibbi of Rolling Stone magazine, the man who coined the term vampire squid, says it's time to bring Goldman Sachs to criminal trial. Jason Tyler of Ariel Investment says it's time to buy the stock. Colorful writing versus cold analysis. Jason is Senior Vice President and Bank Stock Specialist at Ariel Investments, a firm with $6 billion in assets and a position in Goldman Sachs shares. Jason is with us live from Chicago. So, Jason, colorful stuff for sure from Rolling Stone magazine. Dick Bovee of Rockdale Securities downgrading Goldman to a sell, putting a price target on it of $120. Right now, Goldman is what, at $142.75?
Yep.
Would you be buying?
Eric, yeah. I mean, this is a value investor's dream, is when you get a situation like this where you get a lot of headline bad news overhanging a high-quality company, and you see that the details are being overlooked by investors, but the headlines coming out have these sensationalist headlines in them. So frankly, we see there's a good opportunity here right now.
So Jason, do you think that the analyst, who I guess we won't name right this very second, who made that call is just having some sort of knee-jerk reaction after he read an article in a magazine?
Deirdre, I think that's exactly what's happening. I spent a lot of time over the last few days looking at the piece that Congressman Coburn and Levin did. It's 646 pages. That gets boiled down to a 10-page article in Rolling Stone, which has a lot of bad language, not a lot of analysis in it. And that gets boiled down to a one-page, 4-paragraph summary by the analyst. This is a bad game of phone tag. And we've got really good detail that Coburn and Levin did. It's a tremendous piece. I don't think it's really being interpreted that well in how it's getting out into the investment community.
Jason, let's be fair to Dick Bovee of Rockdale, because Dick didn't write his piece solely on Matt Taibbi's story in Rolling Stone magazine. What Dick is concerned about is the pressure that the Justice Department may be under to do something about Goldman Sachs. At the very least, perhaps start an investigation, if not actually file criminal charges. Is that not a possibility?
I think it's great to frame it that way, Eric. It is a possibility, and I think there are going to be a lot of eyes on this because the Coburn-Levin piece is very thoughtful. It's very thorough, and it brings out the fact that there are a lot of conflicts of interest that exist in dealing with the large investment banks, and Goldman certainly had an opinion kind of in the ivory tower that it wanted to get rid of risky mortgage assets. The problem is that as anybody that deals with Goldman knows, when you go and sell something to them or buy something from them, it doesn't mean that they agree with the position that you're taking. They can be on the other side of the trade. And so what it really comes down to is disclosure issues. Those are very complex. And so as the Justice Department reads the report that came out and does its own investigation, it's very possible that we're going to have charges in place, but it's not as simple as I think the headlines that are coming out are being summarized as.
So, Jason, you don't worry to the extent that Goldman is going to lose business, that any of its institutional clients are going to think twice about doing business with the firm, either in an emotional reaction or an analytical reaction?
Yeah, that's the real short-term risk to the stock, and they've been to this movie before. We've seen them take hits over these reputational issues in the past, and they just come through it pretty clean. And it's important to realize that everybody's saying that Goldman was out to get its clients. These aren't the retired investors that are investing their life savings. Even the transactions that are under the most scrutiny, the other side was Morgan Stanley. And these are very sophisticated investors who know exactly what they're doing. They had an opinion about what was going to happen with the value of those assets. And I think in hindsight, Goldman happened to have been right on this. They certainly made a market in their own assets. But as long as the disclosure was fine and they didn't breach fiduciary responsibility, I think it's hard to boil all the complexities down to such a simple argument that everybody needs to go to jail over this.
Jason, we only have about 20 seconds left. If Goldman's franchise is intact, why are the longs in this stock so weak right now? It's down 15% this year.
It is, and it's wild. The book value of the company is it's under 120. It's about $120 a share as we sit right now, and the stock's just above that. I think everybody's concerned about whether or not M&A activity is going to come back, what trading is going to be like. They were probably second in the race to get to the recovery behind J.P. Morgan over the last couple quarters. Fundamentally, there's still a lot of skepticism, and clearly now we see there's a regulatory overhang too. But we think that there's enough margin of safety in the stock right now.
All right, a margin of safety. We've heard that from somebody before. Warren Buffett. Jason, thanks as always for being here. Jason Tyler of Ariel Investments. We're talking about the concern over Goldman Sachs.